Right now, we are seeing renewed strength in XRP, with price rebounding sharply from recent lows and climbing roughly 30% off the bottom near the $1.11 region. Many technical analysts across the crypto space have been discussing the idea that the market may have already experienced its capitulation phase, meaning the majority of forced liquidations and panic selling could already be behind us. Some analysts have pointed out the possibility of a double bottom structure forming, which historically can signal the end of a corrective phase and the beginning of a new accumulation cycle. Hey guys, welcome back to Whiteboard Crypto Update. In today's video, we will talk about XRP. So be sure to stay focused, as you surely don't want to miss out on this. If you're new to the channel, be sure to subscribe to the channel and turn on post notifications by hitting the bell so you never miss any of our uploads. This video is for educational purposes only. It is not financial advice. Always do your own research before making any investment decisions. When markets go through capitulation, it often feels uncomfortable and uncertain. But if that phase is truly complete, the next stage typically becomes accumulation, a slower, steadier process where long-term participants gradually build positions. This is where conviction gets tested. It's easy to feel confident during rallies, but true strategy is often built during periods of weakness. Historically, many successful investors accumulate during dips rather than chasing price after major moves. Of course, every investor must make decisions based on their own research and risk tolerance. Now the big question becomes, where could XRP be heading from here? To answer that, we have to zoom out beyond short-term price action and look at global developments that could shape the broader digital asset environment. One important development has been unfolding in Japan. The Japanese finance minister has expressed support for blockchain-based settlement systems, including initiatives connected to SBI. SBI Holdings has long been a strategic partner of Ripple and has publicly supported XRP's role in cross-border settlement infrastructure. Japan has historically been one of XRP's strongest markets, and regulatory clarity there has often allowed innovation to move forward more confidently than in some other jurisdictions. If global financial systems continue exploring alternatives to traditional fiat settlement rails, blockchain-based solutions could become increasingly relevant. Some analysts have even speculated that if global liquidity stress or carry trade dynamics unwind in certain markets, faster settlement infrastructure like distributed ledger systems could play a meaningful role in stabilizing cross-border flows. While these scenarios remain speculative, they highlight why institutional experimentation with blockchain matters. Looking back at previous major bull markets provides additional context. During the 2017 cycle, XRP experienced a dramatic rally despite being listed on very few U.S. exchanges at the time. Much of the momentum came from Asian markets, particularly South Korea and Japan. Again, in the 2020-2021 cycle, XRP participation on U.S. platforms was limited compared to other assets, yet significant moves still occurred. Historically, international demand has played a major role in XRP price expansions. Beyond exchange access, regulatory clarity in the United States could be another key factor. Legislative efforts around digital asset market structure and stablecoin frameworks have been actively discussed. Some policymakers have emphasized the urgency of passing clearer rules to support innovation while maintaining oversight. Infrastructure for stablecoins and blockchain settlement systems is already being built. What many institutions are waiting for are clear rules of the road. If comprehensive frameworks are established, application-level adoption could accelerate. To understand XRP's long-term thesis, it's important to consider the broader tokenization narrative. Distributed ledger technology is increasingly being discussed as a mechanism to tokenize real-world assets. This includes equities, debt instruments, and even real estate. Traditional equity markets operate with settlement delays and limited trading hours. Blockchain-based tokenization could theoretically enable near-instant settlement and 24/7 trading. The global equity market alone represents tens of trillions of dollars in value. Debt markets are even larger. Global debt has been estimated well above $300 trillion. If even a small percentage of that market were tokenized for efficiency, transparency, or fractionalization purposes, it would represent enormous transaction volume migrating onto blockchain rails. Real estate markets globally are also valued in the hundreds of trillions of dollars. Tokenization could allow fractional ownership, simplified escrow processes, and programmable settlement conditions. When you add together equities, debt, and real estate, the total value of potentially tokenizable assets reaches into the hundreds of trillions. Even if only a fraction of this activity moves on to distributed ledger networks, the transaction demand could dramatically expand the overall digital asset ecosystem. Currently, the entire cryptocurrency market capitalization fluctuates around a few $1 trillion. The contrast between today's scale and the potential addressable markets is significant. This is why many long-term XRP supporters focus not just on short-term price action, but on positioning within global infrastructure conversations. Ripple has consistently targeted cross-border payments, liquidity provisioning, and enterprise partnerships. If tokenized assets require interoperable settlement layers, digital assets that are optimized for speed, low cost, and scalability may be well positioned. Historically, transformative technologies often begin as novelties before becoming indispensable. In the early days of the internet, many underestimated its impact. Today, global banking, commerce, communication, and infrastructure rely heavily on internet connectivity. A prolonged outage would disrupt nearly every sector. Proponents of distributed ledger technology argue that blockchain networks could eventually become similarly embedded within financial systems. Of course, adoption does not happen overnight. It unfolds in phases: experimentation, pilot programs, regulatory refinement, and then scaled deployment. The conversation around tokenization, stablecoins, and instant settlement suggests that we may be somewhere between experimentation and early deployment in several regions. From an investment perspective, this environment requires patience and strategic thinking. Some participants believe that accumulating during uncertainty can position them for potential long-term upside. Others prefer to wait for clearer confirmation trends. There is no universal strategy that fits everyone. What history has shown, however, is that digital asset cycles can be powerful. In previous cycles, certain assets have delivered exponential returns during peak expansion phases. While past performance never guarantees future results, it demonstrates the volatility and upside potential inherent in this asset class. Investors who entered early in prior cycles sometimes experienced dramatic portfolio growth within relatively short time frames, but those gains also came with significant risk and drawdowns along the way. When discussing wealth creation, it's important to emphasize purpose and responsibility. Financial growth can create opportunity, but it should align with long-term planning and disciplined management. Communities often help individuals stay informed and emotionally steady during volatile markets. Whether through discussion groups, research forums, or analytical communities, sharing perspectives can provide balance and insight. Looking ahead, XRP's trajectory will likely depend on a combination of technical structure, global regulatory clarity, institutional adoption, and broader macroeconomic conditions. If capitulation truly occurred near recent lows and accumulation is underway, the next phase could unfold gradually before any larger expansion. The coming years may look very different from today's financial landscape. Tokenization of real-world assets, stablecoin integration, and blockchain settlement infrastructure are no longer fringe ideas. They are active areas of exploration by governments, banks, and fintech firms worldwide. Whether XRP becomes a central piece of that infrastructure remains to be seen, but its positioning in cross-border liquidity conversations keeps it firmly within the discussion. Well, guys, that's all we have for you today. What are your thoughts on XRP? Get involved and let us know in the comments down below. If you guys liked this video, then be sure to give this video a big thumbs up. Thank you for watching.